Welcome to another day in the Matrix. I'm just going to make a quick video today for YouTube, and then I'm going to follow it up a little bit later with a video for my mastermind, private mastermind group. If you guys are interested, shoot me an email in the description below, and I'll get you onboarded in that. So what we're doing today is looking at this repeat of a fractal that I've been discussing, where the price will come up to the 618 as high as the 786 fib and then fail. And one of the things that we saw this morning was the price got exactly up to 52,600 in that area on a bunch of different charts. But as you can see, that is the 0.618 fib in this current range, from our current all-time high down to the swing low. And one of the things I'm going to do in the video for the private mastermind is I'm going to be discussing this right here, which is a Wyckoff's schematic and how it plays out. So it's just a little sneak peek. We're going to go through building that together and discussing how that's broken down. Let's get into a little bit about this price that we saw today. So first and foremost, it's March 3rd, which is 33, like 33rd degree Mason, which stands for the 33rd degree when ice turns back to water, which equals the unfrozen mind to allow in gnosis. So just to unpack that, Jesus dies at age 33, is dead for 3 days, gets reborn as the 33rd degree, the unfrozen mind, the ego death, and is now able to fully be a Christ. And I guess there's also the idea of a star exploding and now being able to accept the light. And let's get a little bit into what we see here with the price. So for one, we have the Coinbase chart hitting 52,666. And then we have the Gemini chart hitting 52737. We type that in and we get 24, or reverse 42 for Jesuit right here. And also when we do Gemini, we get 33, which is also today's date. And if I write today's day out, we get 33 for March 3rd. Another thing we get is 51, which shows up in Moon and anything in regards to money, also in Mars. And what is this month? It is Mars. So we have the 51 and 15 playing out on today. Keep that in mind. These all are intertwined. So you have Mars, you have March, and you have 3rd, the 33rd degree. So today's a special day. They pumped up the price in literally a couple hourly candles. So I know for a fact that was pure blown manipulation. We just saw from last night all the way up in a straight line to perfectly get rejected at the 618 fib. I'll get back to that chart right here. You can see the rejection pretty nicely. And another way we could confirm the rejection is if we bring up the volume, which we just see right here. I know it's really small, but if I zoom in, you can see that when we got rejected right here, we can see the sell volume come in pretty hardcore. So this was absolutely planned to hit this exact target at this exact time. Now it could pump back up, of course, you know, there's plenty of room. Like I mentioned, the previous fractal got us all the way up to the top of the 786, which in our case would now be the $55,000 level. And that $55,000 level could be possible for the end of our automatic rally. And the reason why I consider it possible is because that's what happened in the last fractal. We hit 42,000, got smacked down for the selling climax, pumped up for the automatic rally, basically failed within a couple $1,000s, harshly rejected, and then we saw resistance below this trend line. So we have this white trend line here. We came down below it, confirmed a flip as resistance, and then broke down for our selling climax. And now it would be totally normal to come up, bash it again, and get another rejection before continuation to the downside. And again, these don't really matter at this time. This is a very steep trend line. But remember, as the market continues, these pumps to the upside are going to be very, very exuberant. Anyone who looks back at the charts from the 2017 bull market will see that. There was these big corrections, 30%, upwards of 40%, but then it led to 200% gains almost every single time. And that's just kind of the way it rolls. We've already discussed our targets for the end of the month, potentially $63,000 Bitcoin, $66,000, and 72, leading into April 4th, which would be the 44 date. And that, again, leading into Satoshi's birthday on 4/5. It's going to be a lot going on. And of course, with the 4/5, you have Bitcoin in reverse. So we will be seeing some confluence, I believe, in April and also in this month with the 6th date. And the 6th is going to be a Saturday. For Saturn, let's see where Saturn is. Okay, of course, with Saturn, you got 21 and 42. So again, back to Jesuit with Saturn. All these things matter. It's crazy when you start looking at it from a full picture through the planets all the way into the English language spellcasting names that they've given us to work with. They've given us plenty of tools to work on getting the information that's necessary. So just that quick little decode today, and obvious price manipulation up to certain levels in a very organized fashion. Now, the big question is, will we be making new lows? I've discussed this idea of next week, potentially upwards of March 13th, March 14th, in that range, which would be approximately a week from today. Anticipation of low 40s again. Now, it doesn't mean it has to happen. If we repeated this fractal exactly, this moment right here was this moment. This moment right here is the moment we are in now. And we could have a spring action, or potentially just call it a supply test in Wyckoff's, which we'll discuss in the mastermind. But that supply test coming down to potentially as low as 41,000 to retest this back area right here. This whole area would make a lot of sense to me, exactly around 40,000, because you have these previous highs of just a wick on the 42. And then you have this previous area right here, exactly around 41. You have most of the trading range here around 41, and then you have this peak right here of the previous automatic rally at 40. So this idea of next week dumping into this area to peak down into it is also confluent with our 55-day moving average, which I keep bringing up because I know it is very crucial. If I go to the daily chart, you'll see where that level is right now is very, very confluent with all of this information that I'm sharing with you. So for one, the 55 right now is sitting around 41,700. So of course it could peak up higher, but we could always wick below it. That is also very normal. So we'll just have to see how it plays out. Another thing to mention about today is if I remove all my drawing tools and just leave a set of moving averages that include the 21. So, one second, excuse this. So if you see right here, this orange line, the orange EMA is the 21. And typically when we get daily closures above it, we start to print a continuation to the upside. Now, the only thing I'm a little bit weary about with this is, first of all, the pattern of just dumping down like this and having a very sharp V-shaped recovery is possible. It would be very reminiscent of this time right here back on Thanksgiving. If you see, we had a dump below and then a quick buyback, and then we went sideways before making new highs. That pattern could absolutely be in the cards, where we pump up and do have a new high and then consolidate in the high 50s before moving to the upside. But the fact that we just pumped all the way from this 30 level to high 50s and then didn't backtest any of this lower region too much, except for recently, it would just be a little fishy for me. If you look right here on the VPVR, you see this really thin zone between 42 and 46. You could see it right here in this region when I move my cursor. That area right there is a little bit weird. So filling that out is what we want. We want to fill out all of this range because we want when the bear market comes to prevent these levels from being filled in later. It's much better to have the levels of support being built and fill out this volume range. Of course, we have scarcity on our side and all that jazz, but more importantly, these sorts of technical concepts are very, very important in having a healthy bull market. Remember when the price broke out of new all-time highs and just went parabolic and it hasn't been revisited? I was making videos back then talking about how that was very surprising to me. But again, we're in a bull market. So this idea of us having a V-shaped recovery and completely hitting onto new highs soon is possible. And the reason why it may be possible is because we're starting to close dailies above the 21. We had 2 days ago, then we had yesterday, and now we have today, looking like a bullish engulfing candle. And that sort of concept leads to continuation. So just saying, anything could happen. I'm more prepared for downside. And again, look at the daily Bollinger Band sitting at 43. That would be great. If we get a chop down, that would also level out to around where the 55-day is. You see the white 55-day and the bottom Bollinger Band are super close. So that would also be confluence of another touchdown to the bottom of the range. And you can see if I remove all these other moving averages and we just keep the Bollinger Bands, you see how we haven't tested the bottom Bollinger Band yet. That would be very bullish because back here we were getting multiple tests. So you see when we had this automatic reaction, we flipped above the median Bollinger Band pretty quickly. And here we haven't closed a daily above it since we've dumped below it. So again, the Bollinger Band is really helpful for understanding where we'll pump to tops and also where we'll find support at bottoms. And now that you see that the Bollinger Bands are starting to come sideways, you see how they're flatlining. That obviously we're in a consolidation zone, but with that being said, the median Bollinger Band line is something that I could look towards to today's daily close and also the 21 EMA. So this is all important stuff. But even if Bitcoin closes today above the 21, it doesn't necessarily mean we're going to pump up. People need to understand that these EMAs and all this stuff are going to go out of the window soon. What I mean by that is like this is probably the last bull market where you're going to see this kind of shit matter. Very similarly to the 21-week moving average. In the last bull market, this retest to the 21 was really normal, and we haven't even retested the 13 since we left the trading range that Bitcoin was in for about 3 years. So think about that. We got stuffed out by the topside Bollinger Band on the weekly back in August and September, and then finally we came down to the 21, and that was the last test. So that was the last incredible time to buy Bitcoin. And as you can see, that's where our VPVR point of control is on the macro. Think about that, right? If we were back in 2017 and we knew about the 21-week EMA, that would have helped us significantly. But where is that helping us now, right? If we don't ever backtest this 21 EMA, then that sort of gets thrown away, right? Like we have to be willing to accept that there's things that happen that change. And I'm very new to this myself. Like, I don't have nearly as much experience as some other people in terms of time, but I think I have the ability to adapt. And that's why I've been able to come up with these alternative ways of doing analysis, even though they're unorthodox. I think it's very important to see that this kind of information is okay to know, but it doesn't necessarily mean that it will happen. So far, the gematria stuff has been ultra precise and very important. The numerology and the gematria is, in my opinion, so much more helpful to understand where these things can go and when they'll go. But these moving averages and everything, I think they're starting to get kind of thrown out the window. Even Bollinger Bands are a lagging indicator. They do help. Daily, 2-day, 3-day, weekly Bollinger Bands help. But again, last couple weeks ago, we had that close super bullish outside of the top side Bollinger Band on the weekly, and then we just had a dump candle. And again, on the week of February 22nd, 222. And that was just incredible to see. And we saw XRP on the 22nd just completely pumping while everything was dumping. So that gets back into the XRP at 22 on the 22nd day. And I did promise some people that I'll make a video about XRP and XLM. There are some quick things to get into, but I'll break it down in a separate video, and I think it'll be really interesting for people to see the ties, because I do have a video prepared for Ethereum and XRP and XLM we could do together, and then potentially one on Chainlink. And it'll show you guys how this is all ran by the same entities. You might have gotten that already from watching my videos, but yeah. So anyways, we'll leave it at that. Bitcoin's looking really bullish today, but the sell volume came in right at that 52,600 level. That showed me that was just manipulation to hit a certain level at a certain time, and now the sell wall was too high. As you can see, this is the same level back here before that distributive top. So before the distributive top is exactly where we touched, but we did make a new higher high from February 24th. Okay. So, and of course we made that super high. That was a very volatile day, but it was the, anyways, separate video for that. But, yeah, we did make a new higher high today. So that is good. That is a bullish sign. That does mean that there's juice to move up, but we're just going to have to see how this goes, because I sincerely believe the daily will come back down to the $43,000, $42,000 level one more time. I'm willing to accept if I'm wrong and we just pump straight up. But again, I did tell everyone that I am looking for new highs this month. So catch you guys in the next video.